Washington. The coming cut in the state and local tax deduction comes with a marriage penalty. That's what tax experts said Saturday after studying the final language of the tax reform bill that Republicans in Congress plan to pass this week. And that marriage penalty, they say, is just one of several family-unfriendly elements in a tax package that will, at first, lead to a tax break for most Americans and a 40% tax cut for corporations. Republicans reveled in the fact that they were nearing passage of the most comprehensive tax package in 31 years. It means relief for hardworking families and a jump start for our economy, said House Speaker Paul S. Ryan, a Wisconsin Republican. The Nonpartisan Tax Policy Center said the measure would mean a tax cut for Americans in all income brackets in 2019, although wealthier Americans will get a proportionally bigger break and the bill's benefits will diminish over time for most Americans. The outlook is much darker for residents of high-tax states such as New York, for large families, and for anyone who thinks these tax cuts will last forever. That's because, the marriage penalty. Federal figures show that slightly more than a quarter of the taxpayers in western New York take the so-called SALT deduction for state and local taxes. The rest don't itemize their deductions, and even more will stop itemizing under the GOP tax plan, given that it nearly doubles the standard deduction, to $12,000 for singles and to $24,000 for married couples. But the tax bill also comes with a built-in disadvantage for married couples who, between paying $10,000 in state and local taxes and having other write-offs, will still find it worthwhile to itemize their deductions after the 2018 tax year. When they do, they'll encounter a marriage penalty. Why? Because it doesn't matter if your household consists of two highly paid professionals with children or if you're a high-income bachelor, the $10,000 tax write-off cap is the same for the family and the bachelor. Why is it fair that a couple can receive a doubling of the standard deduction yet doesn't receive a doubling in the state and local interest deduction? Asked Anthony Ogrek, a Williamsville financial planner. In practical terms, the change means that proportionately more single New Yorkers likely will continue to itemize their taxes, just because a $10,000 SALT deduction and a few other write-offs will easily get them over the $12,000 standard deduction. Couples, in contrast, would have a much harder time clearing a $24,000 hurdle. The marriage penalty emerged in the last iteration of the tax bill. Earlier versions restricted the $10,000 deduction to property taxes. But when House Senate negotiators heeded the wishes of California lawmakers who wanted state income taxes included in the SALT cap, they did so without making any adjustment for dual-income couples. We were glad to protect as many people as possible, whether single or married, said Rep. Tom Reed, a Corning Republican. Republicans stress that the SALT cap and the marriage penalty will affect very few taxpayers. Reed has been citing 3 examples of taxpayers in his district who would save under the tax plan, a single filer who would get a $649 tax cut and 2 families that would get tax cuts of up to $1,699.